Hi everybody, Ian Miller from MCT here. Thank you so much for joining us. We're just going to wait a few more minutes to let the room fill up, probably about 2 or 3 more minutes, and then we'll get started. Thanks. All right, everybody. Looks like we've got a full room. So once again, thanks for joining us for our introduction to MCT's new InvestorMatic program. My name is Ian Miller. I'm the CMO here at MCT. Also joining me and presenting today are Phil Rizzori, our COO, and Justin Grant, our SVP of Capital Markets. Guys, you want to say hi?
Hey, guys.
Hey, guys.
All right. So thanks for joining us today. We are going to, go over the program step by step, cover the certification process as well as the software that's involved, talk about why the program was created, what it means for lenders and investors, and finish up with some questions and next steps. So let's get started. So the first thing to cover is what is the InvestorMatic program. The program has got 2 parts. It's a certification process that rates investors based on the technology as part of the loan sale process that they provide to sellers, and then it's a suite of software to help investors improve that technology process. And the goal of the program is to improve the experience for the lenders, to create more consistency and give them more and better options, more convenience. So just to clarify a few things right up front is to talk about what the program is and what the program is not. So first of all, what the program is. The program acts as a handy reference for lenders. Certifications at bronze, silver, and gold, show lenders who are, looking at investors that they work with, what they can expect in terms of the technology and the loan sale experience. The program is also a driver of improvement in the secondary market. The idea is that together we can all take advantage of the latest advancements in technology, take away the inefficiencies in the process, and ultimately get to a better experience on all sides of whole loan transactions. The program is also it's a pathway for investors. So for investors who are interested in advancing their technology and working with more sellers and providing a better experience to those sellers, the InvestorMatic suite of software allows them to do that. The program is also an opportunity to shine for those investors that are willing to invest in that experience that they provide. This gives them an opportunity to distinguish themselves. And the last thing to clarify for what it is that this program is specific to loan sales and technology. So now what the program is not. The key thing here is that this program is not the whole story of the relationship between sellers and buyers of whole loans. There's many more factors involved in knowing who would be a good fit for you as an outlet for your whole loans. And so, it's just very important to recognize that the relationship, the customer service experience, many aspects outside of the whole loan trading process should all be involved and are involved in the process of deciding who you want to work with as a lender. Another thing that's important to know is that the InvestorMatic certifications aren't involved in the best execution analysis that MCT provides to lenders. The primary component of that best execution analysis is generally price, which has nothing to do with this program. And so the last thing is that what the program is not, or it's not price, volume, or platform dependent. So as I mentioned, the price component that is so important to achieving that best execution has nothing to do with this program or the certification levels. The volume that a particular investor has nothing to do with those levels. And even the platform that's used, whether it be MCT's platform or other platforms, whether proprietary or otherwise, is not a component of those certification levels. So with that kind of caveats out of the way, the certifications have 3 levels, the bronze level, silver level, and gold level. All of these indicate that investors have taken steps to create a modern and thorough experience for sellers when they're doing their whole loan trading. I'm not going to go through all of the details of these 3 certifications. You can check them out on the program page on the website, but primarily these involve things like the convenience of the process of executing whole loan trades, the diversity and depth of executions that are available, the speed of turn times and bid in getting bids back and commitments back, as well as other factors. So at this point, I'm going to turn it over to Phil to give a little bit of a background on why we've created the program, as well as go into a little more detail about these key areas that are involved in the certifications.
Well, thank you, Ian. And, just to echo Ian's point on what the program is not, definitely I know we've got a lot of clients on the phone. Definitely it is not, as Ian said, the whole story. And frankly, given the fact that in a best execution, by definition, price is a substantial part of the story, it's not going to affect a whole lot of your best execution. Like Ian said, what this is meant to do is try to move the industry to, kind of the current world and the future, the near future world where we see it. And so we'll talk about that a little bit. But basically, ever since let's call it summer of late 2013 into 2014, we saw this proliferation in new investors, which has been a great thing. And again, that's going back 5 years, almost 6 years now. That's been a great thing for all of the lenders on the phone as far as just competition for your whole loan product. But as we move to bid tapes and credit, the groups that got us there to a data-driven execution, starting with PennyMac and then AmeriHome and then all of the other investors that followed to, give us that true data-driven execution, that started us off on a new world. And then a lot of, again, speaking to the clients on the phone, the new world changed again in May of 2018 when we brought, starting with Wells Fargo, BidTape AOT, basically, came onto the scene and really changed execution. I mean, it's the biggest thing to happen to aggregator execution in 20 years. And we're marking, the reason we say 20 years is talking to, although we weren't necessarily all around in 1999, we hear that that's kind of when the first, some of the first bid tapes were coming out back then. As all these investors entered the market, a lot of them, came to us asking for a technology solution for their bid tapes, for their desk. And, mainly the reason they came to us was mainly because we represent somewhere between, at the low side, 25%, and at the high side, 50% of that given originator's volume and client base, or I should say, excuse me, aggregators' volume and client base. So that was, obviously, we were a big component, and obviously are a big component of their, of their selling, their lender client base. So, we went back and forth on creating a investor aggregator product that would compete with some of the solutions that are currently out there for aggregators. The main reason we didn't really see a whole lot of value in it for our customers is that we're creating this product to, for an aggregator to be more efficient for all of their customers, when in fact we really only care about how an aggregator interacts with our customers, with an MCT lender. So we kind of turned it on its head and basically just, went out and, tried to survey our clients, also our traders who interact with all these aggregators, and basically look for, the key characteristics outside of price that is, that basically differentiate, an aggregator as far as efficiency and kind of forward thinking, if you will, affecting our client's execution and experience, as Ian put it, in a positive way. And so, the first and foremost, basically, kind of core functionality that we need is, we've talked about this with a lot of investors, a lot of clients as well. We pushed this program called BAMM Shadow. It started about a year and a half ago. We pushed this. It probably needs a better name, but we see this as probably one of the biggest things we can do for our clients and frankly the market as a whole, as far as liquidity and efficiency. And so what Justin will go into this in further detail, but basically what we're doing here is we're anonymizing all of the data. And so, a given client of ours will have 15 approved buyers that they can send their bid tapes to. And we, probably, as far as active buyers that we're dealing with all the time, we're probably dealing with over 100. But as far as active buyers that are buying loans every day, there's at least 50 of them. And so those other 35 buyers, the client will, by definition, never get a price from. And so back about a year and a half ago, we started the program with some investors where we anonymize the data. So again, Justin will go into this into further detail, but from the lender's perspective, we're taking out obviously all of the, property address and the borrower name and the loan officer and the brand, all that good stuff. So it's completely arbitrary data, and allowing the investor that the lender is not approved with to bid on that, to basically see what they could have achieved in execution had they been approved with that investor that they're not currently approved with. So Justin will go into this in further detail, but this is a big initiative for us, allowing our clients to get true visibility, in the market on what they could execute their given loan for. Obviously, bid tape AOT is key. So you'll see that there's a lot of programs out there right now. Not all of the programs are equal, and so what we're trying to do is make sure that we get everybody into basically a program, all aggregators into a program where we can execute at scale on the AOT side. Again, this is something Justin will go into a little bit more in detail, but historically AOTs you needed to have tolerances, and this created issues when you were trying to do AOTs at scale. And what I mean by scale is we see this as such a benefit to our lender clients that a year from now, our goal is to have 70% of all commitments be associated with an assigned trade. The bottom line is that, especially on the government side, when you're pairing out of a trade, you're losing money that does not need to be lost, in that bid offer spread that exists. And again, we've gone over this before in our client webinars, but this is not money that the broker dealer is taking in the transaction. There is a little bit of broker dealer spread, but this is more just a market friction cost that exists for our lenders when you're doing a small trade on a government, on a Ginnie security. So that is an inefficiency that simply needs to be taken out of the market. So we're going to continue to push this. This will be a core tenet of the program. And really the top three here are basically by far and away the most important out of the five. So the third is bid tape mark to market, bid tape, and we term it bid tape indicative pricing. There's two programs out there right now. And again, credit to Wells Fargo and PennyMac for pushing this. They are pricing all of our clients' production to a bid tape execution. I think if you listen to myself on any of these conference calls or panels, I'm a little bit of a broken record about this, but this is an issue that has hit the market and will continue to get worse. But in the last 2 months, we've had three very sizable aggregators remove their direct trade and AOT model. And so that creates a problem when we go out and try to give you, the lender, an accurate depiction of the value of your derivative asset. This obviously is most important at the end of the month when you have to book that derivative asset value. And so there's been a big divergence between your indication pricing that exists now just in rate sheets, right? Best effort rate sheets, frankly. That's the only way for us to get a true good indicative price of that investor that's pulled away their direct trade AOT model. So as you know, that best effort price does not reflect the execution that you're going to achieve when you take that out, when you take out that commitment at the bid tape desk. So that is getting worse and worse and causes a lot of artificial gyrations in derivative assets and valuations. And again, this is not just a fluffy number. This is a number that can break warehouse covenants. This can cause a lot of issues. So bid tape indicative pricing is where we want to push a lot of the investor community to where they can give us, the investor can give us a bid tape indication price at the end of the day for the mark to market. And again, if you think about what a normal bulk desk is used to dealing with, usually you've got, your days loan sales. So on average, let's say there's 22 trading days in the month on average, and you're sitting with, a given amount of loans coming in every day to best X that you're going to bid on. On average, over time, the bid tape mark to market is going to be 22 times the size of what you're normally receiving from MCT clients. So there is a scale deal there that Justin will go into in a little bit more detail. But that, again, it's not an execution advantage. The top two were clear execution advantages, right? Shadow is extremely important from a standpoint of us being able to show our customer, our lender customer who we're responsible to for showing them what the best execution is out there. It gives us a methodical ability to show what those executions are. Bid tape AOT, again, that's a just a great innovation that's come to our market that really enables us to take out the number one friction cost that exists in selling your loans today, which is pairing out of that, pairing out of that security, especially on the government side. Bid tape indicative pricing, not an execution thing, but obviously from a reporting standpoint, essential with regards to derivative asset pricing. So the last two are a little bit more experience driven. We've talked about data encryption in transit, basically moving off of email, moving to our platform, BAMM, where all of the borrower's data is encrypted in your bid tapes that you're sending aggregators. The at-rest conversation, if you've been to one of our client exchanges, you've heard me talk about this, that we need to try to move the industry to take those property addresses and geocode those. And we have a GeoCoder. And there are some investors that have worked with us on that. The problem is we can't, we really have to wait till we get all of the CRA investors on board. Again, the CRA is really the only reason, CRA pickups are really the only reason that we're putting those property addresses in those bid tapes. And again, until we get all the investors on board, it's not worth it to roll this out as a full-blown requirement of the program. But this is something that we see as a middle of 2020 initiative, and we're going to continue to push because, again, without getting too much on my soapbox here, again, when if you're sending that loan out to 15 investors, there's only one investor that really should know the property address and the borrower information, and that's the investor that purchases the loan, right? The other 14 now have that data sitting there, and that is perfect information on that loan. And we're not going to accuse any aggregators of doing this. We're just going to say that it is very possible that that aggregator now could easily use that information for perfect lead information, given a drop in rates. Obviously, we've been through, a great summer of low rates here. And for those of you that have a servicing book, that's something that you don't want that borrower information shared, at that level in the bid tape. Same thing, of course, from an aggregator's perspective. If you're that 1 out of 15 that actually bought the loan, you probably don't want the other 14 of your competitors seeing perfect information on that loan. When it was originated, rate, FICO, DTI, every piece of information is in that bid tape. So that's something that we're going to continue to work to get the industry this way. Move the industry over to geocodes instead of property addresses. But we're not there yet. We need to get all the investors to that really matter to our clients to buy off on this. Last thing, and Justin's going to talk about this by far and away. This is important from an efficiency standpoint, not a execution standpoint, but we have a really big dispersion of how quickly bid tapes are coming back. So sometimes some investors that can send us a bid tape back. Well, there's some investors that have APIs that will give us a bid tape back relatively immediately. There's others that'll give us the bid tape back in 90 seconds. There's some that'll take 15 minutes. There's some that'll take an hour. And so that's something that, again, for those of you that are aggregators that are on the line and bid tape desks, we completely understand the volumes have been, really nothing that we've ever seen before, at least during the period that, we've all had this agency bid tape execution out. So we understand that there's definitely been some, unexpected volume increases this year. But going forward, into 2020, we really want to get that faster and faster so that it can begin to match some of the executions that we're getting, like for instance, from the agencies where it's an API, where it's a lot more automated for our lender customer. So I'll let Justin go into kind of how we can help some of the aggregators who, think they're going to have a problem, getting here to these five bullet points, especially those top three. But again, this is something that we'll continue to, work with investors on in a lot of different, in a lot of different, methods. We can, as Justin will talk about, we have solutions for some of this, but we also have, different ways of working with an investor as far as data transfer through APIs and things like that. So, Justin, you can go ahead and take it from there.
Yeah, thanks, Phil. All right, perfect. So, guys, everything that Ian and Phil have been kind of espousing here really involves our platform, right? And how transactions, loan sales are occurring through our platform, and that's Bid Auction Manager. So all you're seeing right here, just a little graphic, Bid Auction Manager is our platform that's helping to facilitate that exchange, the data exchange, the loan sale. And really what we'll kind of go into is how, we're dubbing InvestorMatic software, some of the solutions we have where you can help facilitate that exchange, the technology for those key areas. If you want to go to the next one. Perfect. So first, I know Phil started with this, but the bid AOT, what we're calling auto AOT. Some of you out there will use the term hybrid AOT or bulk bid AOT. I know many of you know we've been pounding the pavement, like Phil mentioned on this topic. Phil continues to express how it's really the biggest thing to happen in secondary markets, in a long time, at least for the small mid-sized lender that's not securitizing. So, the key characteristics this time around from the traditional AOT that really have made it a game changer and allowed number one, smaller lenders to participate in assigning trades, but also for everyone to be able to assign a much larger percentage of their trades. By far and away is the doing away of the tolerance. So historically, we've always seen investors. Now I think the most common was a 2% trade tolerance. So if you wanted to assign $1 million in trades, right, you had to deliver. You as the client had to find something between $980,000 and $1,020,000 on that specific product and on that specific coupon, which, like Phil said, in the last 5-6 years, especially as we've seen more entrants come into the market, more buyers, it's gotten more competitive. From a best X standpoint, it's gotten much harder to do, let alone from a volume standpoint for some of these smaller lenders. So the doing away of that restriction is one of the biggest game changers there. We're now where there is no restriction, and these investors that have kind of led the way and released these programs, now they can auto blend the price. So if we've got $700,000 in loans and want to assign $500,000, they'll automatically blend the $200,000 overage at current market and price that loan, or vice versa. Being able to under deliver. If we want to assign $1 million trade on only $750,000 in loans, being able to apply the gain loss on that trade, appropriate to the loans, is key. So that's been the biggest game changer that allows our clients to really participate and take advantage of those bid-ask savings, like Phil mentioned. I mean, conventional loans, we're usually talking 3 to 5 basis points here. Especially if for you lenders that are on the line, if you're participating with some dealers, maybe you're a little off the screen execution wise, that's going to further those trade gains. And to Phil's point, on the govies, it's going to be even larger. So we through our system, through BAMM, and I know many of you have already worked with us to get this implemented. We've got a number of you investors out there who have worked with us to get integrated with BAMM to facilitate those assignments. But for those investors on the line that haven't, I know we've talked to a lot of you, to try to push this, but our system can easily help you out with that. We're willing to work with you to get integrated. Couple of things that we can do. I know there's some third parties out there that use the investor community are using to power your bulk bid execution. One that says they support the assignments, but really the feedback we've gotten is they can't handle that blend, and that has to be done outside of the system by the investor. So it makes it a little cumbersome and manual. If that's the case, we'll talk about AutoBid later, which is our full solution and answer to that. But we can also feed you that blend and do the math for you. We've got APIs that can connect and speak to the system to facilitate the assignments. Some of the nice things with our system that we can do is at time of request for commitments, we can spit out that fully executed triparty. So that's another big differentiator from the legacy, the legacy assignments. Historically you had to, print out a form, that triparty agreement, fill it out with all the trade information, sign it, even fax it back or scan it and email it. So it's a little cumbersome, especially if you're talking multiple trades. MCT's BAMM software does that all for you. So I know we've got some lenders on the line that have used this, and we've gotten tons of feedback on how great it is for them, how seamless and how much time it saves, because at time of request, that's all integrated. Triparty automatically populates, completely filled out with a signature. So you the investor, are getting that executed triparty at time of commitment. So much earlier. You don't have to go flag down the client to get that complete before you can go in and check out the trade with the broker dealer. So again, a lot of ways we can help you out with the bid AOT there. Next up on the list, Automark. Phil mentioned that kind of one of the, really the only downfall of kind of the rise of the bulk bid AOT over the last 5-6 years is the doing away of the direct trade models. And it makes sense from an execution standpoint. That's, you're kind of playing off law of averages with the rate sheets, the direct trade models, whereas the bulk bid, you're getting perfect information on them. So the only time, if you're an investor that offers, a bulk bid and also a direct trade price, over time you're gradually going to degrade that direct trade price just so you don't get arbitrage, because the only time something's going to get executed through that channel is when you're mispriced. So as a result, like Phil mentioned, we rely on those direct trade models to give fair values in our clients' mark-to-market reports. And so more and more it's becoming a problem. And just in the last 6 weeks, like Phil mentioned, we've had 3 more large investors do away with that. We've now got valuations on our clients' open pipelines that are drastically understated in some cases, which makes it hard. Not only is it affecting the financials, that derivative asset is the largest piece of, for you clients, that derivative asset is the largest component of those monthly entries you're booking your financials based off of. But it's also, hard. You just have no visibility. The mark or the investor it's best exing to is almost meaningless, since there's so much change at time of bid. And so, like Phil mentioned, we're really trying to push this to start to get bulk bid levels. And again, credit to PennyMac and Wells Fargo who've led the way with this. And we want to get more of you out there to do this as a service to the clients. And guarantee it'll be a sales differentiator for you as well, since again, it's going to provide clarity as well as help out the financials. And so, one of the things as we've discussed in the investor community with some of you out there in doing this is this is much different than just running bid tapes through at the end of the day, just from the sheer size and the number of loans we're talking about. Doing loan sale, you're talking a fraction of a client's pipeline that are funded and ready to be sold. Now we're talking the entire pipeline. Right now MCT has over 35 billion cumulative in our hedge that we're hedging for our customers. And while none of you don't have perfect 100% penetration with our clients, many of you do have very good penetration in our clients. And so we're talking anywhere from 50 to 100,000 loans, or essentially a 50 to 100,000 loan bid tape that would need to be priced, that most models we're hearing just are not built for that. So that poses a challenge with with the investor community. And so we've got a solution to help with that. We've got some things added into your BAMM logins that can help aggregate that, and then we'll go over the AutoBid software as well that can help with that. So again, probably the third most important there that Phil was talking about, the auto shadow. Again, this may be one of the best things that we could hopefully bring to the market is transparency on that best execution price. Phil mentioned we've got any given month, right around 50 different investors that our clients are selling to. The average number of investors our clients at MCT are sending out bids to are about 15, 16 different investors. So, we're talking another 30, 35 plus investors that are out there and growing. There always seems to be, every month or so there's somebody new popping in that's whether they're just looking to get into the market full-fledged, or maybe they've got certain access, certain types of loans they're looking to buy. Bottom line is there's a lot of executions out there that our clients are not seeing. And so we've created a way, a systematic and streamlined way, to really capture that pricing out there, which is great power for our clients. Again, it's providing visibility into, just the sort of execution they could see out there in the market, and if nothing else, reinforce the fact that they've got their current executions, maybe strong, and nothing else is needed. So, like Phil mentioned, the big thing is through BAMM, those 35 or so investors that our clients are not approved with, those investors' logins will, through a separate view, we'll be able to see those shadow bids come across. And again, we completely anonymize the data. So you investors out there, you don't see who the client is. We strip out all the NPI, so no borrower names, no property addresses, nothing. It's just your plain vanilla loan data with a kind of an aliased code for you to reference. And the idea being is, whether it's through AutoBid, which we'll talk about here in a second, or your own pricing engines, we've got some tools that will allow you to pretty easily bid those tapes. So if you're an investor that doesn't have a lot of penetration, you might see 70 to 100 bid tapes post on any given day that you have the opportunity to, to shadow bid. So the idea being that this allows you to kind of create a systematic, automatic way to provide pricing on all the other MCT clients' loans that are out there. And number one, get color, right? We as an agreement with our clients, we're not showing, when you're winning, how much you're winning by. You're just going to see that you won. But all those loans that you're not winning, that's color. So if you're a newer investor, an investor that doesn't have a lot of penetration, number one, you're going to get a ton of color. You can send back to your teams, analyze, find pockets of your certain loan parameters where you're out to try to refine your pricing models for for future bids. But from the client standpoint, they will soon be able to see you investors out there that they're shadowing. And as we've kind of been rolling with this in beta mode, some of the feedback we've gotten is that from the clients is that they love to see this real time as well. So that is one of the current challenges with the shadow. Something like this is when you're talking 70, 100 bid tapes you're trying to shadow at any given day. Most of you, the way that you're set up, you've obviously got to prioritize the existing bids with existing clients that are approved with you that are out there. And so the pricing models that y'all have, just can't facilitate that real time shadow bid. So we'll get into that too, but that's become pretty apparent. What seems is going to be the most effective with our clients in kind of getting in front of them with that color. Auto secure, again, that's encryption and in transit and at rest. Phil mentioned we have a GeoCoder, so for those of you that participate or looking for CRA loans, obviously you're using the property address right now. If some of you have noticed, if you look at the bid tapes right now, we're already providing those MSA codes and track numbers in there, and the goal is to eventually remove the property addresses again, so that only the winning buyer has that information. But obviously, at that when we do that, you would need to be able to use those geocodes to process and identify those CRA eligible loans. And so for those of you out there that might not have something like that, we can work with you with our GeoCoder that we've built out. And then AutoBid, this is really kind of a culmination of everything out here. We know there's some other third-party bulk bid providers out there that help some of you guys out with processing those bid tapes. Really, we think we've got a great product here. Frankly, one that can create, for our MCT clients, one that can create really an on-demand, instantaneous experience. And the idea being that, we've got a portal that will allow you to manage those margins, at the product level, obviously the client level, whatever percentage of spec pay-ups you're passing through, and however granular you want to get on your margins, those can be managed through our products so that, we can recreate and produce that bid price for you to our clients. The advantage of using AutoBid with us and our clients is, since your pricing will live on our system, and obviously we're helping to facilitate the bids from the lender side, we've been able to create, basically in kind of an instantaneous on-demand price, so that when a client posts their bids and sends out their loans for bid, they can, it will automatically ping the pricing engine that that you guys are managing and we've built out for you, and create that price. And again, it can be on demand, where from a client standpoint, they're going to have your price or be able to retrieve the price, as soon as they want, so they can get that much quicker on days like this where we've got some market volatility. They can refresh as often as they'd like to get that updated bid level. And that's powerful, as we've already had some investors move that route. Many of you clients know how powerful that is. Really, when we're talking efficiency and speed, to try to bring the time it takes to do a loan sale and really bring that down to minimize slippage and risk. So that's a really key factor there is that on-demand price generation that kind of puts the power in the client's hands. And again, we've built AutoBid to facilitate everything, all the bullet points that we've talked about above. So it's automatically got bid AOT integration and support, if that's something that hopefully you'd want to offer. It can handle large data sets. So when we're talking about Automark, right, putting bid levels into clients' mark-to-markets, that can facilitate that very easily as well. So the kind of the cumbersome size of just the sheer number of loans we're trying to price, that can handle. And then the nice thing on the shadow side as well as with AutoBid, we've got that set up to where that's something you don't even need to manage. It's going to automatically put out your shadow bid price at the time the client, those clients that are not approved yet, at the time they post their tapes. So that's all being managed in the background automatically, which again is great. You don't have to have somebody to sit around and manage it and process those tapes. It's automatically going to put your levels, your shadow levels there, which again you're going to be able to get a ton of pricing color on, and again for our clients it's a win as well because your bid is out there in kind of a systematic way where we've got all that historical shadow bid pricing database for the client to see. So really we think it's it's kind of a game changer for MCT clients on our platform. So we'd love to talk to you guys if any of you out there, number one, just don't have the resources and want to implement some of these things, don't have the resources, or just from a timing standpoint, this is something that would be a large undertaking and, would rather get something up sooner rather than later. InvestorMatic Analytics, last thing here, and I'll pass it back off to Ian. Real quick for the you clients that are on the line, this is kind of the flip side to the monthly iMarket reports you're getting that kind of show some stats on your investors. For you investors out there, some of you are using this where you're just getting access to a lot of that pricing color and can identify maybe pockets or certain loan parameters, where maybe improving your price could improve those win rates there. So that's kind of part of commingled with all that shadow color as well. So a lot of great information. Ian, I'll pass it back to you because I know you want to finish it up, and then we might have a few questions here.
Perfect. Thanks so much, Justin. That was a perfect overview. So last two things to cover here. Next steps for this program. We will be reaching out individually to all active correspondent investors about the certifications and to talk about your technology and a pathway for improving it if that's appropriate and of interest to you. Justin will be doing demonstrations of InvestorMatic software for those that are interested. And we do plan to publish those investor certifications in 6 to 8 weeks. In summary, thanks for coming to this webinar. InvestorMatic, it's designed to improve the lender experience. We want to move into the future where there's more consistency, convenience, and execution options for our lenders. The certifications give lenders a handy reference on what to expect when they're working with a particular investor or considering which investors they should be interested in. The software provides a pathway for investors seeking to improve in these areas, and together we can push the secondary market to new heights. So at this time, you guys can use the question submission component of the webinar tool there to send in any questions you have. We'll take just a few minutes, answer the ones we can, and any that we don't have time to get to, we'll be following up individually. So any questions at this time, feel free to shoot them in. All right, I've got one question here. It looks like this one's for Phil. So Phil, will you share, will certification requirements change over time?
That's a great question. You know, the whole, like I said earlier, the whole reason for the program is because there's been so many good changes from the lender perspective, you know, in the world of aggregator execution. This is, you know, not, yeah, I would say the last 2 years have not been a normal period for, you know, technology expansion, you know, efficiency, you know, it moves to efficiency, and also, you know, of course, bid tape AOT, and then all the other stuff we've talked about with regards to, you know, mark to market accuracy, bid tape mark to markets, shadow programs, things like that. You know, the whole ability for us to get on the platform of BAMM has allowed us to do a lot more with aggregators, with investors, and you know, for our lender customers. So I think the answer is yes. It will change because the market changes. You know, we all continue to evolve, which is great. So it's going to change as the industry evolves. However, this has been, you know, the last couple of years have been a big, you know, there's been a big change in execution in kind of the way I should say, in a big change in the optimal manner that investors interact with our lenders. So I think that while it will change, I don't see it changing dramatically, you know, for the short term, you know, near term, foreseeable future.
Perfect. Thanks, Phil. Looks like we just have one more question. How will clients know about investor certifications? So those certifications will be published on our website. We'll be sharing them through our email newsletter, and eventually they'll make their way into MCT Live, although we don't have a specific timeline on that. Oh, here we got one more question. Phil or Justin, approximately what percentage of AOT business are we seeing?
Justin's more involved on the analytics side, so I'll let him do the exact answer there.
Yeah.
But again, we want that number to increase. That's the key.
Yeah, and that's a great question. One we've had some conversations with investors already that are looking to implement bid AOT, but couple of highlights there. Right now, it's about 2/3 to 70% of our clients that are actively assigning every month, and so all for those clients that are assigning on looking at the last 6 months, it's anywhere from 25 to 30% on average of trades that they're assigning. So it's a significant portion. Again, it can be limited just as there's still a number of investors that aren't offering this, and still want to get that up to 70%. But yeah, currently for those clients that are actively doing it, which is again about 2/3 of our client base, they're close to 30% of their trades they're assigning. So when you look at MCT's total trade volume, it's somewhere in the teens. You know, almost 20% of all trade volume, call it 17, 18% is kind of what we've averaged that's getting assigned.
Cool. Perfect. Thanks, Justin. All right. Looks like we've gotten through all the questions. So thank you so much, everyone, for joining us. Phil and Justin, thanks for the excellent information you shared today. And we'll look forward to more conversations about InvestorMatic moving forward. Have a great day, everybody.
Thanks, guys.